One of my clients I brought on was making $250,000 a year, yet only paying herself $2,000 a month. Another one that I brought on was paying themselves literally nothing, like absolutely zero. And if the IRS were to catch this, it wouldn't just be one bad year, but it would be a multitude of all the years that they've been doing this. And if you're being honest right now, you're not really sure which one you are. You know that you're supposed to be paying yourself something, but you're not sure exactly how much or how actually to do that. And by the end of this video, I'm gonna show you exactly how to fix that. There's gonna be no more guessing involved. You're gonna know exactly how to pay yourself, as well as how much to be paying yourself based on your income level. My name is Harrison Patton. I'm a licensed enrolled agent and tax professional, and I run my own accounting firm after leaving one of the top accounting firms in the entire world so that I can help entrepreneurs just like you. In today's video, what we're gonna be doing is we're gonna be going step by step exactly how to pay yourself, whether you're an LLC or you have made the S-corp election. We're gonna cover exactly how much to be paying yourself and all the steps from start to finish to make sure that you're completely covered and compliant with the tax rules. So first, let's cover the regular LLC. So if you're a regular LLC and you're just a regular business owner, you might be asking yourself, okay, if I'm not an S-corp, which whatever the heck that means, how does paying myself even work? Like, how do I actually go about doing this, right? And so this is actually the situation that I'm in right now, as I'm still a regular single member LLC. There's nothing wrong with doing this. It's just the process looks a little bit different. And so what you're gonna be doing is when you're at this kind of starting stage, you're going to be operating as like I said, a regular LLC, and you're just gonna be taking what is called owner's draws. And so simply what this means is you're just moving money from your business bank account to your personal bank account. There's no special payroll, there's no special filings, nothing involved. It's simply just noting, hey, I moved X amount of dollars from this account to this account, right? From business to personal, right? And this is why it's so important to make sure that we have separate bank accounts for our LLC and our personal, because we don't want to be commingling anything, as that creates audit risk and that creates just a lot of mass confusion that can really just make your bookkeeping and all of your financials get a little bit more confusing, which nobody wants all that. So the process to create a business bank account is quite simple. So when you set up your LLC, you got an employer identification number, otherwise known as an EIN. And so what you'll do is you'll go to a bank and you'll use that EIN rather than your social security number to create a bank account, so that the bank account is in the name of the business rather than in your own name. And like I mentioned, simple process from there. All you're gonna do is when you make money and you need to take some money for your personal, whether it be profit or you just want to, move some money to your personal, you're simply just gonna create an owner's draw, which is just transferring money from the business bank to your personal bank. And just making sure to keep these two accounts separate and making sure, of course, to always document when you move this money. And a key point to note here is that doing draws and having this stage of your business, there's nothing wrong with it. No matter what people push about how everyone needs to have an S-corp, there's nothing wrong with operating in this way for an extended period of time, right? The main reason that you're gonna be making the S-corp election, we'll talk about later in the next part of the video, but the main part is just sale and self-employment tax. And if you're at the beginning stages, it's really not gonna hurt you that bad, especially compared to the cost of running the extra filings for the S-corp. So once again, nothing wrong with running your business this way, nothing wrong with paying yourself this way. If you're not an S-corp and you're just a regular LLC, you simply just take money from your business account, transfer it to your personal, and it's called an owner's draw or owner's distribution. And so all of this is fine until your revenue moves into a certain level, and at that point, the tax math starts to work against you. So let's get into that and explain that. So on every dollar that you're making as a regular single member LLC or partnership, it gets hit with what is known as self-employment tax or FICA tax. And this is an extra 15.3% tax on every bit of money that you make. Also, side note, this is hilarious. This is an AI presentation. Look at the writing right here. You can't win with this stuff. Back to the business. So this self-employment tax pays for your Social Security and your Medicare. And it's just a plain old 15.3%. So it is quite the number and takes quite the hit off of your overall profit amount. And so what we're gonna be doing is once we hit around the 30 to 40,000, maybe even a little higher, what we're gonna be doing is making what is called the S-corp election. And so what this does is you still have your entity as an LLC from a legal standpoint, but you're going to be changing to being taxed as an S-corp from a tax standpoint. So legally, still an LLC, the IRS will look at you as an S-corp though. So it's just a simple form fill out that you do. And so what it does is it creates tax savings on that self-employment tax, right? This isn't some weird loophole. It's just the way that it works, the way that the IRS has it set up. So it's just an incentive that's built into the tax code because that's what the tax code does. It incentivizes us as entrepreneurs to promote business, to stimulate the economy, right? And so the way that you get the tax savings is it essentially splits all of your profits into 2 buckets. And so the first bucket is your W-2 salary, right? This is what gets hit with the self-employment tax. This is similar to you taking owner's draws, right? It gets hit with all of your federal, state, and the self-employment tax of that 15.3%. But then the other bucket is just your owner's distributions. And in this case, those do not get hit with the self-employment tax. So that is where the benefits come in. So say you make $100,000, right? If you're that single member LLC that we were talking about, then the whole thing gets hit with the 15.3% self-employment tax, which would be $15,300 in self-employment tax. However, if you make the S-corp election, what you're gonna be doing is splitting it into 2 buckets. So say you split it 50-50, only that $50,000 salary will get hit with the self-employment tax, meaning you only pay $7,650, which is $7,650 in tax savings just from filling out a simple form. And once again, it doesn't make sense until you get to a certain income level though, because the tax savings aren't outweighed by the extra cost for payroll filings, making the S-corp return, and a couple of other compliance things that go along with the S-corp election. And so with the 2 clients I mentioned earlier, this was actually something they did properly. They did make the S-corp election to save on the self-employment tax, but this is also where they went wrong afterwards. So once you make the S-corp election, you do still pay yourself, but the process changes a little bit. And so you might be asking, okay, I elected S-corp, now how the heck do I pay myself? So what the IRS wants you to do is they have a standard called the reasonable compensation that they want you to pay yourself, right? And so for everybody, it's gonna be a little bit different. You're gonna pay yourself a little bit different based on your industry and your role and what you're actually doing. But overall, your reasonable compensation, it's not a guess, right? It's what would I have to pay somebody else to do this role for me? So for the first client story that I mentioned earlier, they were making $250K a year, yet only paying themselves $2,000 a month, which is $24,000 in the year. That's not reasonable for what you would pay themselves, and that would be way too low in the eyes of the IRS. And so another thing that they got caught up with is they had a lot of distributions that looked like disguised wages to not pay themselves self-employment tax. And that's one of those things that raises a flag with the IRS. And that's another thing that we had to work with them on when we actually performed preparation for the tax return, right? We had to make sure that we were finding a way to represent the payments to themselves in a proper way that would be justified with the IRS. The second person, once again, paid themselves nothing. That's not okay with the IRS, no matter how much you're making. If you made the S-corp election, you have to run the salary, you have to pay yourself, do the payroll filings. And one of the big things, I'm not trying to blame the business owners because it's not their fault at all. They had accountants that they were working with before me that just didn't stay in their corner year round to guide them through this process. So it's not a failure of the tax code or anything screwed up with that, but rather it's a failure on the guidance that they were supposed to be receiving, that they were paying for and just not getting. And that's one of the biggest issues I found with most tax professionals is they're not in their clients' corners year round. So whenever you are actually figuring this out, figuring out how to pay yourself and figuring out how much to pay yourself, make sure that you have a proper tax professional in your corner. If you're not sure where to go, you can click the link down below in the description. I have free guides on exact tax strategy that you should be asking your accountant about to make sure they're doing their job, or you can book a call directly with me and I'll get you handled. Anyways, back to the video. So when you're finding your number, right, if you go too low, the IRS can reclassify your distributions as wages and you'd owe payroll taxes, back payroll taxes, interest, and penalties across every year that it actually happened. So let's look at how we would actually find our benchmark. And you can of course do as much research as you want, but a good starting point is to go into something like Perplexity, which is great for research, or you can use ChatGPT. And you'll simply just ask it, what is the average salary for whatever your role is in whatever my city or state is at a company doing approximately X amount of revenue in annual revenue, right? And so this result can be a starting point, right? Obviously you can go up and down based on your role, based on your situation, but this gives you a good starting point and it's something to keep documentation of to justify your position on why you had the opinion that your salary was justified. So to summarize this slide, you have to have a reasonable compensation for your job, right? Ask yourself, what would I pay somebody else to be doing my job? And if you do multiple jobs, such as sometimes you're in management doing the admin, other times you're actually packing things, then you can kind of use a percentage basis to get the precise salary that you should be paying yourself. And the second thing, use your research tools. Use Perplexity, that's a great research tool, and ask it what the salary would be for somebody in your position, in your area, for a business doing that much money. And so these things can all be combined to create sort of a document that'll justify your position in case the IRS were ever to come ask you. But of course, using a tax professional is always what I recommend most. So whatever position you're in, whether you're still a regular single member LLC, taking owner's draws, or you are a full-blown S-corp with a full payroll system paying yourself along with other employees, just make sure that you have somebody in your corner. That is the biggest thing. As a business owner, your job is to run your business, not to focus on the overhead financials, right? You need to have somebody in your corner that is taking care of you in that spot. Because something as important as your reasonable compensation or the amount of money you're paying yourself isn't just a once set and forget thing. It's a decision that evolves as your business fluctuates, right? Sometimes you'll want to pay yourself more as your business is doing good. Sometimes you'll want to pay yourself less as you're having a little bit of a hardship, as that's the reality of entrepreneurship. And that's why I can't stress enough how important it is to have an accountant in your corner, a tax professional in your corner who isn't just filing the numbers that you give them, but actually working through them with you and guiding you on the entire process, as that is my ultimate goal for every single one of y'all that watches this, is to have you with somebody that is guiding you through the process, teaching you everything you need to know on the tax side of your business so that you can focus as the business owner on growing the business and they handle all that for you. So once again, if you need a direction on where to go with asking your accountant to make sure that they're doing the right things, I have a free guide down below that'll take you through a short quiz that'll take you less than 3 minutes, and it'll give you a customized tax plan that will give you the exact information that you need in order to be asking your accountant the right questions to make sure that they're actually doing the job that you're paying them for. Or if you feel ready, what you can do is you can schedule a discovery call down below and you'll talk directly with me and we'll see how I can help you on your tax savings journey and help you to become a successful entrepreneur. I hope you enjoyed the video and found it helpful. As always, never stop your relentless pursuit of continuous improvement, and I'll look forward to us talking again soon.